It's a 100% chance of a recession. Everyone's telling you again that this time is different. They've told me every single time in my career, and I've been in this game for 30 years, that this time is different. I don't think it is. So let's go back to my favorite log chart. Here's the log chart of Bitcoin log chart using the regression channel, one standard deviation oversold. Are we headed to recession or are we headed to a growth shock? My core hypothesis has been a growth shock because it's easier to forecast than the recession. But as you'll see coming forwards, there's a lot of things suggesting a recession could be on the cards. Either way, it's going to change the structure of markets and how we're thinking about things. And the key one is inflation. You see, inflation, yes, it's driven by supply issues, but inflation really is driven by demand. If you take demand out, then there's less demand for those goods fall in price. So the next chart is looking at that inventory to new orders ratio and its relationship with CPI. And what you can see is this last leg of CPI explosion, which was Russia, plus some of the existing supply shocks, while the inventories to new orders in the United States has been coming off. And it's suggesting that we could see a fast turnaround in inflation. We saw something similar to this in 2008. 2008, we saw the oil price hitting $140 a barrel. We saw soft commodities at that time screaming higher, very similar to now. And that was driven by Chinese demand. That was a demand shock, less of a supply shock. Now, if you look back at the chart here, you can see back in 2008, we saw the same thing where inventories in new orders was falling and inflation was rising. It was resolved by inflation collapsing. And I think that is going to happen now too. But what I've said to people is you need to understand what higher prices does to people. If you're not raising wages or you can't raise prices as a corporation, the high prices that you've got are demand destruction. They're a tax on consumers and businesses. So if I want to represent the tax in a different way, here is the gas prices at the pump in the US. We could use nat gas in Europe. There's a bunch of these things that are exploded. Food prices exploded. And what that means that these consumers have had to pay a tax. Their discretionary income has been more used now for the basic goods and services that they've needed. We've seen this in the past when healthcare costs exploded or schooling costs exploded. Both of those are moderated in recent years. But this is a shock that means people spend less on other stuff. I'm looking at the chart of oil, and I don't know which way it goes, but it's looking to me that this is the GMI crash pattern. And the GMI crash pattern is it makes a peak, it then kind of messes around a bit, it creates a floor. When it breaks that floor, price accelerates lower. If that is the case, then again, it's going to add to my story that inflation is going to moderate because of demand destruction, and that the global economy is slowing faster, and it's going to change some of the equation. This is based on the dollar, oil price, and interest rates, and they look at it versus ISM. Now, this is really concerning, and this is the point I've been trying to get across to people. I've been explaining it on Twitter, I've been explaining it in Real Vision Pro Macro and Macro Insiders, is that it's suggesting that the ISM really could collapse. This one's saying it goes to 42, which is a full and decent sized recession. These data series are volatile. It doesn't always go tick for tick, as you can see on the chart. It gives you the general direction, and that the probability of crossing 50 is pretty high right now. So I would take that seriously and concerningly, that the forward-looking growth is going to decelerate so rapidly that people are not prepared for it yet. Well, here we've got raising rates, which is white. This is the Fed funds rate. And every time we raise rates, guess what? The yield curve falls. So we've got this setup where the yield curve is going to tell us there's a recession. When the yield curve crosses zero, it's a 100% chance of a recession. Now, everyone's telling you again that this time is different. They've told me every single time in my career, and I've been in this game for 30 years, that this time is different. I don't think it is. Is there a probability that it's different? Of course there is. There are no certainties in the world. But the odds are pretty good to me, particularly with all the evidence I've just shown you over the course of this piece. I think there's a lot of evidence to suggest the yield curve is right again. Do we get the full recession again? And it's not my base case. Listen, I'm not sure that this time things are different. I'm saying, yes, we've had some extreme events, and extreme events lead to offsetting extreme events. We had the extreme events of the pandemic, the extreme events of the inflation, and then we get to the downside of this. And with this kind of magnitude of monetary tightening, we're going to see an accelerated downside in growth. Crypto network adoption model. I've talked about this. I updated this chart a while ago. Most of you haven't seen it. The crypto adoption is now massively outperforming the internet. It's been growing at about 165% a year versus 85% for the internet for the same period of time now. So this is the fastest adoption of any technology in all human history. We are going to get to 5 billion users by 2030, i.e. full-scale adoption of crypto as technology for the internet of value and a host of other things. And 1 billion users comes in 2024. And that's by lowering the rate of growth again. I'm not assuming that growth stays as red hot as it has been. And in fact, growth has been slowing. So I think that is the magnitude of what is happening. And you can own this, unlike the internet. It's much easier to own because you own a share of the network by owning the crypto. The next chart shows it in a more dramatic way, which is not on a log scale. And we're assuming the internet was growing at 43% a year from about year 6. Year 1 in this case, or year 0 in this case, is 5 million users. We took crypto and internet users at 5 million and then looked at their growth as they adopted. So after year 6, the internet was growing at 43% a year. So if crypto grows at 43% a year, gets to year 10, which is 4 years' time, at 1.2 billion. But if it continues to grow at 76, which is a lowering of growth versus the 165% it's doing now, we get to 2.8 billion. I mean, these are astonishing numbers. The world has never seen anything like this before. So whatever happens, whatever the trend rate of growth is, this is exploding. So my macro backdrop is massive. Short term, however, the total market cap of crypto, year-on-year rate of change, has stopped growing. And we've had these periods of time, which are the bear market. So in 2020, we had a period of time of this. But I think if the central bank balance sheets are coming back into play, if growth, i.e. growth equities, going up, because global growth is falling, then crypto's going to do very well. And I know there's a lot of people expecting a crypto winter. I don't think that is the case. I think we need to watch what happens to the economy. If inflation goes, crypto takes off. Inflation just needs to moderate. If I look at how we look at the network, total crypto volumes, well, they've been trending sideways for a while now. And sideways volumes tend to lead to sideways markets. And that's what we've had in crypto. Volume has to grow over time to show network adoption. And we've not seen that. And so therefore, we should see this kind of sideways market until we start to see volumes come. So let's go back to my favorite log chart. Here's the log chart of Bitcoin log chart using the regression channel, one standard deviation oversold. That one standard deviation sold is as big an oversold as crypto as Bitcoin ever gets. So we should be buyers, not sellers. I mean, could it go lower? Possibly. Probability, no. So I think you should be a buyer and seller. We're looking for this inflection point of this, maybe the ETF, maybe the ETH 2.0 staking. That's going to change the dynamic of this market. And if inflation numbers are falling and growth is falling, you want to own crypto. Long duration assets. Here's the log chart of Bitcoin, just the recent price action. It's just sideways. Nothing's happened. I love a sideways consolidation. Sideways consolidations lead to explosive upside. Now, does it go lower, hit the bottom of the channel? Probably, possibly. Don't know, don't care, because I'm in this trade for the long run, because the long run, you need to ride the exponential log channel. And I prefer ETH than Bitcoin because here's the ETH Bitcoin cross. It's a running flag, and normally that resolves with an upside break. So we should see a significant outperformance of ETH over Bitcoin over time. And it's been doing that in recent times, even as Bitcoin sold off.